I've been here for 30 years.
30 years? Okay.
I don't look that old, I know. I started when I was 6 years old. So yeah, I've been here for 30 years. I actually started right here. It was on, it's almost the 23rd. May 23rd, 1985, I got a summer job here. My father's a doctor, and he had a patient who owned was the head of a brokerage firm called Cowan and Company. It's probably known in Europe. They were once bought out by Societe Generale, and then they went private. And I got a summer job. I had been in many businesses before. I had an MBA. I had a record store in New York. I had a jazz business. And then I had lived in Africa for 2 years, doing finance for the dictator of the country. So I've had a very spanned past. But I started here on the bottom, just typing in trades, and it was just a perfect environment for me. Back then, there were 4 rooms like this, screaming, yelling, you know, what we call open outcry, right? There was paper, like this.
CME.
This is why I still have this in my pocket for 30 years.
They still do that on the CME, right? Or?
Oh, perhaps, yes. CME they do, but we don't. Yeah. We haven't done this for years.
Wow.
And then I just went up the ladder. That's the only way to do it here.
Great.
There's no train. You know, you guys can train for your jobs, but to be actually down here, it's not like you can go to school for it. You know, you learn in the fire. That's the kind of the way it is. Yeah. And it's either the job you love, or it's something you're just not interested in.
Did you know that you're also famous in Germany, or not?
Do I know I'm famous? Yes, of course.
Yeah.
Of course I am. I wasn't always famous here.
Yeah.
I was always famous for something, but it wasn't always good things.
Okay.
But in the last, I don't know, maybe 10 years, it's, how long have you been here?
I arrived here 5 years ago.
5 years ago. So I think it was probably in 06, 07 during the crash that they started letting the press here on the floor, taking photos more, you know, and I have this look, the Einstein look, and I got one picture in a newspaper, and then it became sort of a big deal, and then it took off.
So you're more or less coordinating during opening bell and closing bells? Or
so what, you mean, what do I actually do here for customers? So what I do has been changed over the years, right? In the old days, so you know, on the outside of this room are brokerage firms, right? Your Goldman Sachs, JP Morgan, Citibank. They're connected to trading desks. It's as if you had a company here in the States and you guys were upstairs, all your brokers, and you didn't want to, you were trading electronically, but also you had customers that needed a little more care. So you would have a booth here on the floor, and you would have your desk, and you would call down to a broker, or you would send your orders electronically, then they come to my machine, and then I go out. I can go out physically, or I can go out electronically to the market makers, right? Those guys are market makers, right? So it's the way the room has been set up has been the same for 100 years. If we go upstairs, if you take them to the 7th floor, you can see pictures of this room from 1901, and it looks the same. Brokerage firms on the outside, posts where market makers were. You know, back then there was only 9 public companies in America, so there's only a few guys here. Yeah. But the formation of the room and the standard of the way business was done was almost identical. It's just a little bit changed. But so I used to do, I'm called what's called a $2 broker. So the reason for the name is so Goldman Sachs, Citibank they have their house brokers, people who work for them. And then then you have what's called overflow business. So let's say they have 3 brokers who work for them, and they're doing millions and millions of shares a day. Back in the day when you really needed a human, right now I can send out 1,000 orders in 4 seconds, right? So there's no need for 30 brokers. I can just hit buttons. But in the old days, I could handle 4 or 5 orders at a time, and they would need many, many brokers to do all the business. So Citibank, JP Morgan used to have their own brokers, and then they would have brokers like me who are commission brokers. People who have relationships with the market makers that are special. You know, everybody has a different art down here. Some people are people, you know, I'm the guy who knows about food, about, it's so funny, in the old days there were 1,600 brokers. So this is a seat. That's what's called a seat on the stock exchange. gives me the right to trade stock, right? In the early 1900s, they created 1,564 seats. That was the number. It's like we have in America taxi medallions. You know, when the price of this has gone up and down due to supply and demand, due to the market. You know, before the crash of 29, the value of this was about $183,000. After the crash, it went down to 13,000. Then it went up to 250, then down to 100. The company went public, right, and merged with Eurexchange back in whatever day, right? It was worth $8 million. So the right to trade this has gone, is due to supply and demand. They never made more seats. Yeah. 1,564 seats, started in 1899, right? And so the value has gone up all along. So the kind of business I do has changed over the years. Yeah. I used to do overflow business for the big houses, and then when it became electronic, everybody's just, you'd rather use a machine, right? So I had to reinvent, you know, this room had 10,000 employees, right? There were 1,600 brokers. Now there's maybe 800 employees and 400 brokers because of this machine, right? So me as a broker, I could become obsolete or I can reinvent what I do. So I have to have an added value to my customer, right? So my customer wants the human interaction. He wants to know, he doesn't want to know what the machine says. He wants to know what the feeling's going on. And so here's an example of what I do. So I track 2,300 stocks. All these stocks, what I do. Okay, every day. You can't see it now, but as you know, stocks open at a particular price, okay? And that's due to supply and demand. Mm-hmm. So depending on what happened overnight, there's an interest. Some stocks there's very little interest, some stocks there's a big interest. And so in the morning we get a feed. Here, let's go to stocks that you'll know. So I can sort it by the amount of shares to buy and sell, or I can sort it by here. ExxonMobil, Weyerhaeuser, US Steel, right? So when I'm able to track all the stocks.
You don't see any spreads or
it's
prices?
already,
Oh.
you don't see, the market's open.
Okay.
So once all these stocks are opening, the morning imbalance disappears. Now, if I want to see where it's trading, I can go to the trades. So we look. MOC, this morning, is a company, I don't actually know what they do, but they got a government contract this morning.
All right. So
it's a $2 stock, opened up 50%. It opened at $4.50. It traded as high as $4.77. It went down to $3.77. And these are the trades. I can go back to the opening. Okay, so, and then if I want to see what a stock is doing now, let's pick Alcoa. So that's the market in Alcoa.
Yeah.
So this is an active, streaming, running market. So right now, you'll see it ticking. Yeah. It changes because it's trading. It's offered, right, 79. So you add 2 zeros, that is the price that people are willing to buy it at. This is just like you making a market. Yeah, this is the bid and the offer. Yeah. Someone's willing to pay 84 for 1,800 shares. Someone's willing to sell 15,000 at 84. 83, 84, 82, 83.
Do you have the possibility to open short positions as well?
Absolutely. Okay. Oh, absolutely. Now, my customer has to borrow. Yeah. I don't do the initiation of the borrow. Okay. So if my customer wants to short stock, he does the borrow upstairs. He sends me the order with instructions. And if the stock is trading in line, I can sell it on minus ticks. Yeah. In the old days, you could only short stock on a plus tick. You know what that means? Yeah, sure. Okay, they changed that law. Okay. You guys have always been able to short on minus ticks. Our belief was that that we don't want short sellers to manipulate the market. It doesn't take a genius to figure out if the stock is going from $8 to $7, that it's going lower. Yeah. So to short it, it's not. So their belief was that if you're going to make a bet that the stock is going to go down, and you're going to be a short seller, you should have enough confidence in your decision that you're willing to sell it on a plus tick. They suspended that rule during the crisis, Lehman and whatnot, right?
Yeah.
For us right now, we can sell on minus ticks short as long as we have a borrow. You know what that is?
Yeah.
Okay. If the stock is down more than 10%, we have a short rule goes into effect, which means I can no longer sell it on straight minus ticks. So if it's a $7 stock, down 70 cents already, and I get an order to sell 50,000 short, my machine will know that it's called SSR, short rule exemption. I cannot sell it on a minus tick, so it will always sit on the offer side.
Yeah.
So if somebody comes in and buys them at 83, I will participate in the same.
Does it give you the opportunity to launch a pending offer that once it goes up, like for example 5% again on a plus tick, you go short again?
Once a short rule is in effect, it stays in effect for the day.
Okay, all right.
So if the stock goes from 7 to 5, or 7 to $6.30,
30, yeah. So the 10%.
and then it goes up to 8, it's still, the rule is in effect
for the
until
next
the
day.
next day trade.
All right.
So anyway, so what do I do? In the morning, so I have basically 2 customers, okay? Most customers now, as you can see, it's very quiet here.
Yeah.
There's only 400 brokers. They're not 1,600 brokers, right?
Trust me, it's much louder than in Frankfurt.
It's much louder, still much louder
It's
than
still
Frankfurt.
much louder than in Frankfurt.
You can hear a pin drop in Frankfurt, right?
Yeah.
So anyway, in the mornings it's busy. In the afternoons it's busy. Usually from 10 o'clock to 1 o'clock, it's quiet because people put their orders here. So I have the opportunity to use algorithms. Look at all the options I have. So if I get a customer order, buy 100,000 shares. In this market, when the market goes, as you see it is, as volatile as it is, nobody really wants to make a stand. Why would I buy 100,000 IBM on the opening if, you know, Janet Yellen speaking at 10, market goes down 400 points, up 600 points, I look like an idiot. So most people's position is, I just want to be an average, I'm sure your customers are the same. They do the VWAP. They want to be an average price over the day.
Yeah.
That's the way you can always explain to you, why did I do what I did? If I said to them, you know what, I was in an algorithm, I was 25% of the volume over the day, right? And I beat the average price, the customer's got to be happy, right? If there's a chance I bought 100 thou IBM on the opening, market goes up 200 points, I look like a genius. Chances of that are not so good. I may look like a genius, I'm not always a genius. So what people do, big institutions, is they will buy, let's say they have their morning meeting, they have 1 million shares of XYZ to buy. They will buy 200 thou in the opening. They will buy 400,000 in an algorithm from 10 o'clock to 2 o'clock. Hey, look, so we have the choice here. One of the I have all these, I have hundreds of algorithms that I can choose from, right? So so you have a time weighted average, you have a volume weighted average, 10%, 15%, so look, dollar neutral, I mean, you can do all kinds of crazy shit, right? I can do anything. So what most people will do is they will buy 200 thou in the opening, they'll buy 400,000 over 4 hours. I can do it time, right? 25% of world volume. And then at 2 o'clock, I take a break, and then I buy 400 thou in a close. That way I can explain to my customer that, I mean, if I had 1 million shares to buy, that's what I would want to do. I want to participate on the opening, because you don't know what's going to happen. I want to be an average of what's going on in the world over the afternoon, and then I want to participate in the closing price.
Yeah.
That way I can, any customer would be happy with that explanation,
Yeah.
right?
Did you get the orders to this thing, or?
They come directly from my customer to my machines in my booth, and then directly routed to me.
Oh, okay. So you're immediately acting.
So I receive the order, and then I have a sense of what the customer wants to do. And then if he says to me, just buy them, I just hit a button here. He says to me, buy me 50,000 Alcoa at 79. There'll be a little, if the order generates here, there'll be a little square here, and I can hit it, take button. And I can just take the offer. If he says to me, buy 10,000 and then work 20% of the volume, I can do that too. I can do anything. So,
And it's instant execution.
It's instant execution, if I choose.
Yeah, okay.
Okay, otherwise it can be over 2 hours or whatever. So what do I do? Now, my customer is a hedge, my biggest customer. I only have 2 left. I have one as a big hedge fund. It's about 800 million under management. It's 5 guys, young, they're in their 30s. They all went to MIT. You know what MIT is? It's one of these big, so they're all really geniuses. They are actual geniuses. They are, it's sort of curious, you know, these guys all met, they're all poker players. Okay, they met in Las Vegas, they met in college, and they created you know what card counting is?
Yeah, sure.
Okay, so these guys are all very super crazy smart, all 160 IQ, and they created a card counting team, and they went into all the casinos and made a lot of money. One of my main customer won World Series of Poker, he won $10 million. And so, but what happens is with card counting, even though it's not illegal, it's frowned upon, right? So eventually the casino won't let you in. So they started a hedge fund. So these guys, why not?
Logical decision.
Logical. It's all about probability, right? Trade for my customer, which is one of many strategies that they do, is a short-term trade. So the added benefit of me here on the floor is best utilized in a short-term trade. I'm not an analyst, I'm not an economist, I'm a market reader, I'm a day trader. So my expertise is to make a judgment at 2 o'clock where the market's going to close at 4 o'clock. And through that, I'm able to buy the market, sell the market, short the market, buy stocks, buy futures, and at 4 o'clock, I'm flat.
Amazing.
So that's exciting. I mean, for me, that's exciting. It's, you know what, right now, it's the flavor of the moment, right? It's the fruit of the day. It may change in a year or two, right? 5 years ago, I didn't do this. I was trading customer business. But every day, as the technology changes, and I'm not a big technology guy. I hate this shit, right? I would rather,
You go back to the
I would rather
tickets,
have
right?
this, scream and yell all day long. That was what I was good at. You know, you had a crowd of, it's like an auction. You've been to an auction, right? Old buying antique furniture. You have guys, you're able to read the person, right? You scream and yell, you make, you know, that made me happy. This does okay. I get to work with him, I'm a happy guy.
Peter, David is the winner of our reality show, and he wants to be in finance and maybe a trader, or, you know.
Awesome. What was the contest?
The contest was to trade for 3 months, and you get the depot, and you have to make a lot of money out of 10,000 euros at the beginning.
That's all they gave you? Cheap bastards.
Yeah.
They only gave you 10,000 euro. And how much did you make?
I didn't make so much because the markets go down 20%, and at the end of time I had 10,000. So.
But everyone had less than you. Yeah. It's okay. So you didn't lose.
Yeah, that's true.
It's okay. That's a win.
Yeah.
In this market, not losing is a win. So that's cool. And it was 3 months?
3 months, yeah.
Okay. Well, congratulations. That's awesome.
Thanks a lot. Yeah.
Do you have any recommendations for young people who maybe want
How
to
old are you?
come on the floor?
I'm 22.
Okay. So I have a son who's 22.
Oh, okay.
He just graduated Finance University in Boston. It's called Bentley University.
Yeah.
And he has the bug, obviously, like you. He's been coming here since I was, you know, I've been here forever, so he's been coming here since he was a kid. He loves the market. He's been trading since he was 14 years old. What I recommend to, you know, you're in a world where information is the key. And the internet and the information highway is so important. And you need to wake up in the morning and spend an hour looking at what's going on, right? You need to watch finance television. You know Mad Money, you know Jim Cramer? You know who that guy is?
Yeah, Mad Money I've heard about in the crash 2008. I've seen the picture.
You saw him doing that. So I don't know if you have it there, but we have it here. I'm sure. Can you get US TV?
No, yeah, we get.
You can do it online.
Yeah.
You could watch the stream.
You can watch stream. So, you know, for me, you get guys who are excited about the market. you pick an industry that excites you. I do mentoring for young kids. I bring down high schools here, and I teach them about the market, and we do a contest also, except we give them $1 million. So, and you get a 13, 14, 15-year-old kid who's maybe father's in finance, who also gets the bug, who just loves the market and stuff. And I say to them, all you need to do is walk down the street in New York City. You look at what someone's wearing on their shoes, you look at what kind of phone they have, what kind of computer they have, and what kind of jacket they're wearing. And you buy all those 5 stocks, you're good to go. So you're buying Apple, Nike, right? Michael Kors or JCPenney or whatever. And young people have a great sense of what's going on. If you ask a kid now, what do you think of Twitter? They think Twitter is a piece of, excuse me, shit. But are you on Twitter? No, I don't like that. And that's why Twitter's trading at 14. You ask them about Facebook, everybody's on Facebook. It's trading at 107.
Yeah, that's true.
So, you just got to be aware, look around. The market on for a long-term investor is not that hard, because at least our market is a great place to invest. There are companies with value. If you listen to some of these guys, he's not here anymore, but like Jim Cramer, the Mad Money guy, he always talks about value. You have to identify who you are. You're a young person, put $500 in the market. Whatever you have, that will get you involved. That will make you open the newspaper in the morning. You'll watch finance television. You'll listen to him. You'll listen to me. And you buy stocks with value, right? And that's not, you look around, you'll see that there's a lot of stocks with value. Like a Nike, for instance. There's a guy on the floor here. He's a market maker. Have they met any of the market? Fabian. Fabian is a believer he said that when he was 17 years old, and he also loved the market, and his parents wanted to buy him a pair all the other kids were buying $200 Nike sneakers. And he said to his parents, I'll buy a $10 pair of sneakers, buy me whatever money you would have spent on the sneakers, buy me 10 shares of Nike stock. And it was $30, and now it's $280, right? So, if you think about it, that's kind of what be involved, read a lot. I don't read much, but I love watching this stuff. The internet's amazing as far as, information.
And long-term investment. So when you buy...
For you know what? You can, if you have some money, always have a little bit that you're willing to risk. And then have some that you want to look a long-term for.
Okay.
Trading is a real discipline. Okay, you need to know that you don't always buy when everyone else is buying. When Carl Icahn announces that he just took a big position in AGN, well, he bought it 3 months ago, and now all these idiots are running to buy it because he bought it. Well, that's the time to sell it. You know what I'm saying? So you can be contrarian. You can. I have a friend. I'm happy to give you his name, who runs a trading school.
Okay, cool.
So the discipline of how to trade. I sent my son to trading school from the age of 15 until he was 19. Every summer.
Because in school we don't learn about...
You don't learn about trading. You may learn economics. You may learn a little about finance. You may learn about accounting. But that doesn't necessarily help you here. So I'll give you the guy's name. You go online. He mentors people, young people. You take his class. Then he has a chat room. So there's all kinds of day trading too. There's technical day trading. There's called swing trades. I'm sure you guys know about these. When you get stocks spike up, you make a short play. You can do virtual trading. So just be involved every day though.